All right, welcome in. Happy Wednesday, 12:01. All right, what's happening in the markets? All right, y'all. So, darn AD at AD. How come this thing didn't date not supposed to? AD is negative 229. What the crap? The advancers in the declines, y'all. Check that out. That's big, right? Negative 226, but the market's only down. What's up? Wow. It's interesting. Very interesting. All right. So the AD is weak. It's above its lows of the day, though. So it looks like it's starting to pop back up a little bit. So the opening range today was from 45.58 to 45.72. What's that, 14? 14 points. I always like to see what's below it to stop the falling knife in case we go down. And we only got one thing. That's this little overnight low. So price right now is facing a little bit of resistance at the hourly mid-band at VWAP cash open above it. We've got a pivot point there. Of course, this is also resistance as well, the top of the opening 15-minute range, and then the overnight high. So we got a lot more stuff above us than below us. What does that mean? Well, with an AD being, negative 234, if we're going to have some type of fallout today, I would expect the fallout to be to the downside in the E-minis. But right now we are unchanged. Now we're down a bit, down a quarter. So that's just my assumptions for today. Okay, so everybody kind of knows how we do our little opening market thing. We just want to make sure we're all here and doing good. And so the second thing we do is then we go to volume profile. And we look at volume profile on the E-minis. Reset. Right there we go. Oh, this thing's been taking forever to load. I buy the big old fast computer, get the big old fast internet, fly. All the flies are coming inside trying to hide for the winter I get. Look at this, where we're laying at. Look at that. Isn't that cool? How something we draw on October 1st is still relevant on October the 27th. See, the price is kind of trying to figure, right? Do I need to stay overbought or do I need to walk back down into the fair value range? My assumption is that we're going to do this over the coming days, right? We're going to go into this fair value range, probably to this point of control, and maybe to the 50% line here. That's just my assumption. So neutral, I'm neutral to slightly bearish over the coming days. And I think that will play out quite nicely. So what else do we look at? Well, we look at this little thing called the screwdriver. Screwdriver to help us guide our assumptions. Hey, Rod, I bet your account's doing great today. Oh, Rod's been doing really well.
And tickled to death today.
Yeah, I bet you are.
It's a very good day.
Yeah, I was thinking about you earlier. I was like, yeah, I bet that 401k is really kicking today. The only problem is, all of us, we know what we're doing here. We can't get overconfident on these things. The day's going to come when the TQs are going to be down 60 or 70%. And that's when you got to say, okay, that's when it's Black Friday, right? It's Black Friday. That's when I'm going shopping. And then you got to buy more shares. I mean, that's what we do. So look at this. Let's see, I'm going to write 130 is 1126. Yep. So we're at 42 points away. I go to the one that says 520 and try to see how many distance it is from the money. So our screwdriver for today is 42. So what does that mean? Well, let's go pop it in. That means it's about the same as it was yesterday. So, and we'll go 42 here. And if you're not familiar with a screwdriver basically is just looking at skew and the SPX options. And the skew normally ranges between 25 and 35. So I've got those lines for you here. And we're slightly outside of that. So as far as skew goes, this is slightly bullish, neutral to bullish, right? Because we would expect a reversion back into this range at some point. So we're not far out, but same time, we could go from 42 to 96 again. You just never know. But over time, this should revert back into this average little range that we've got drawn here. So this is neutral to slightly bullish here. So we're neutral to slightly bearish on our charts. So what does it mean overall? Well, kind of just neutral. Right? Kind of just neutral overall. So that's really, really good there. So let's open our little thing, see if we're getting any triggers today on the Empire. Boom, 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 bum, 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 bum. All right, so let's see how everything is going. So we know what the market looks like. Let's see how our account's doing. So we're at $562 today, which is really, really good. The TQs, man, I mean, it's since we got in on, what was it, the 20th or 15th, whenever we went in, it's just been on fire. And that's including, you know, you sit there and you start saying, man, I wish I hadn't sold those calls because I've lost $455 today on the calls. Those calls overall are down $891. But what do I care? Because even though I'm down $460 on the calls, I'm up $724 on the shares. Isn't that great? I mean, I just love the strategy so far. It's just doing so well, so good. Let's see if our thing's open up yet. It's almost there. Here it goes. The old big spreadsheets that I put together, they're so don't update. I have to do that every time. Let's see what else I do.
Available on all shifts. Positions are tipped to higher.
So we've got no signals today, so there's nothing for me to do. I figure we're getting close though. We got to be getting close on getting a signal to start selling stuff. So we'll see how that goes over time. Let me just play with it a little bit. What if we went to 152? Would it give me a signal? Yep, it'd give me a signal if we went to 152 on the TQ. So it tell me to sell 3 shares. So we're getting close. This thing automatically updates. Right? Just keep us honest. So there's no trigger that we got to do today. So good. All right, so let's look at our overall Greeks. See if there's anything that we need to do. So our TQs are just killing it. Our TMF, y'all, aren't we glad that we stayed out of cash? We were going to put this amount and just stay in cash, but thank God we didn't, because now we're up $522 on the triple leveraged bond fund. I love that. So we're not only up on our TQs, we're up on this, which has been a really, really nice trade for us. Our micros do what the micros do, y'all. $5,800 something for the year. That's the money trade right there. That is definitely the money trade. Our VIX is up a little bit today. Our VIX hedge. Our SPY calendar trades are up a little bit today. Our SPX is up a little bit today. Still lost $580. You know, and that's the thing we could talk about too. You know, sometimes we don't need to overhedge either. So even though my theta is beautiful, oh, look at that, $102. My delta is negative. What did I tell you? That on the charts, I'm neutral to slightly negative, so or bearish. So that's not entirely bad, right? It's not bad there, and that theta is beautiful. And the Vega is amazing as well. Now the thing is, you know, do I need that much positive Vega? Positive Vega is a great thing. But, you know, you could theoretically go, you know, I could actually close that SPX trade and be okay because I still have positive Vega. So it's not like I need to stack my Vega as high as I want it. I just need to kind of be neutral to control. Like in this other account, you see I've got negative Vega, but that's fine. Right? That's no problem there with the negative Vega there, and I don't have as much theta. So yeah, you got to look at these things and kind of figure out where you want your Greek. So ideally, you want your deltas to be matching whatever your market assumption is. You want your theta to be positive because we don't want to experience the theta burn that we're going to have on some of our hedges. So this, the black swan hedges, negative theta. The VIX hedge, negative theta. So we've got to give something that gives us positive theta. And the covered calls certainly are the most significant contributor to our theta. And then the micros are contributing as well. So I mean, it's just a really, really good strategy that we've outlet, I think. Now we haven't been tested yet. We're gonna wait, right? We're gonna wait till we get the 20% down move and see how we feel. So far, so good. So I'm just kind of looking over everything, you know, just making sure, okay, there's a black swan hedge, there's a calendar, you know, I try to take those off at a 10% profit. Now, the problem is it's down 27%. How many days you got on it? 23.51. Could I close it? Yeah, I could, but you know, the TQs are just killing it. And maybe I'm throttling it back a little bit with all these trades that are kind of working against it, but it's still performing great. Let's just see. We'll get you the percentage that we're up so far. So here's 1117 up 90%. Normally I sit there and just try to let these expire unless I feel that I need a delta adjustment. So my deltas are negative today, and I'd probably rather be closer to neutral. So there's no way that even though this naked put is at 82% profit that I would close it, because that would give me additional negative deltas. 11118 up 206, calendar 3 down, and calendar and the SPX. We know that one's the big monster that's down for me. 11119. That's the one that's spooky, right? And it's spooky because I don't have all my strikes in here. It went somewhere else. That's fine. 11168. 333. That looks good. Just got 23 days left. Calendar 5, we would expect to be down. 111 after harvest. I'm just going to let that one expire. We got 23 days on it. I shouldn't have harvested that either. 111 20th. 34 days. Wait a minute. That's where some of my stuff is missing, right? My covered calls are sucking. I'm down $900, but who cares? TQs are more than enough, you know, carrying that against. And what will I do with these? I'll roll them. I'll roll them on Friday. Collect more premium. 11118, 157. The bonds are performing very nicely. I'm just shocked at how well this is working. Much better than cash. Is that always going to be the case? Maybe not. BSX 12 down a bit. Make sure that's right. Yep. 11114. 23 days on that one. Up $154. My Empire's was really kicking, right? Look at that. It's up $780 today. And keep in mind, the experts tell us we can't hold this long term. And we looked them straight in the face and said, hold my yoo-hoo. Hold my yoo-hoo. Well, Bobby, you got lucky because it's been okay. I got it, but I want to own as many shares of this as I possibly can. Right now, I'm going 255. If we drop 60 or 70 or 80%, I'm going to have a humongous loss here that's going to be offset by my hedges, and then I'm going to go in and I'm going to buy additional shares because I believe that technology is the way to go. Plus, we got Pepsi in there, y'all. Remember? We got Pepsi in this too. We got all kind of stuff in the Qs. So we're fine there. 11111 of 99 bucks. How many days we got on that? 2 days. Bobby, you're at 99.51%. Why would you not close that? Well, I don't need that negative delta. Everybody got there, right? That's a positive delta trade. So why close it? I kind of like the deltas I got. I mean, you could, you know, but chances are that will expire totally worthless. It's way down there at the 39.10. No need to do anything. 11112 up 102%. 23 days on that. Nothing to do. 11113 up 100%. Bobby, Tasty Trade said, I know what they say. Trust me. I was with them for a long time. Oh, I still watch them. I still love them. Don't you ever get me wrong on that. So these are just 5 that are about to go off here. And another 5 long puts going off in 24 days. Yeah, I love Tasty Trade. Don't get me wrong. It's just that for me, I couldn't trade the Tasty Trade way and make money. I tried for a lot of years. So it must have been me. It's not you, it's me. Remember when you broke up with your girlfriend, or they broke up with you and you were like, or they told you, listen, it's me, it's not you. Oh, I hate it. So it's probably me. It's not them. I just must have done something wrong. And I feel some of y'all may be the same as I was. You was like, yeah, I was with Tasty Trade for a long time, man. And I just kept losing money. I'm the same way. Same way. Some of y'all may have made bank, right? You may have done well. So that one's an after harvest. Oh, I need to show y'all that. I forgot about that. My Frankenstein trade. I can't sell a third one until we get a big market move down. So my Frankenstein trade is just doing what the Frankenstein does. My VIX hedge up a little bit. So VIX must be up a little bit today. And what do I have unallocated? Hopefully everything's been allocated. Everything's allocated. So I did have one field order today. You know, I had, you know, when you wake up, whatever, what time did I do this? 7:12 this morning. So I went ahead and harvested my 6 and I moved it up to a quarter. Why did I move it up to a quarter? Because I don't want to have to pay 50 cents for this. And if my assumption is that the market may go down, I just would rather go ahead and do the harvest for my black swan hedge. So that's what I did. So I harvested those 6, which should make my black swan hedge just look amazing today. What were we up behind? Let's see what it looks like today. High simulations. We're going to do fall step 4. Move that to 15. Let's make sure we got everything in here. High simulations, single symbol. Let's make sure we got it all. Let's see how we're looking on the downside. So the people that tell us we can't hold TQQQ long term don't have these. They don't have an account that on a 20% crash is going to be up $157,000. So I get it. I would probably say the same thing too. Okay, so we're not bragging, we're not cocky, we're just confident in the strategies that you and I put together. So there we are. So that looks really good. Now I need to go, God, what if I put everything in here though, Bob? What if I put your whole portfolio in here? So instead of being up 157, we're going to be up 81,000. Whang, cry me a river. Whang. Or if volatility doesn't shoot up that much, I would expect a minimum volatility or a minimum amount in that account of going up 37,000. That's with holding your TQs and everything. And cool thing is, I mean, if we go down 20%, the TQs go down 60%, and your spreadsheet is screaming to you. What's it screaming? Buy, 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 buy. Right? It's saying take action, baby. Buy, 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 buy. That's what we like. So then, you know, if TQs, let's see, 60% decline. How do I do that? I say if the price right now is 150, and it's 60% decline. So if I multiply that by 0.4, that'd be a 60% decline, right? So let's say that goes down to 60. All right, what's the old spreadsheet saying? Old spreadsheet saying, hey baby, you need to buy 293 shares. Do y'all see how beautiful this is? So now you're not griping and grumbling and going, oh, the market crashed. I'm so upset. I lost so much money. No, it's opportunity. It's opportunity. So we have to switch the way that we perceive the risk in the strategy. And what we'll do is we'll say, we'll just go in and buy 293 shares and believe in the technology aspect of the economy that it will rebound at some point. Now, what if we go through the .com crash? You know, we do the, you know, all the technology stocks get, you know, hammered, whatever. Hey, that's the risk I'm taking. It's a risk I'm taking, but I believe over the long term, technology is going to do very, 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 very well. So that's our strategy. So do I need to do anything today? Well, let's look again. Let's look again. Do I need to do anything? Not really. I made my one trade for the day. I'm pretty much probably done. That's what I like about this as well too. There's not a lot of trades that we have to put on. We don't have to put on the daily this or the daily that. You know, I'm negative deltas, positive theta and positive vega. And we're up $546. What are we up on the account over here? Running a similar strategy. We're up $1,300 on the day. I like it. So if you're, let's look and see what the chart's doing here today. So we're up a little bit, right? So if you want, what's VIX doing? I tell you so many times we don't look at VIX today. I'm trying to get better at that. I need to be looking at it every day. What's the VIX doing? So VIX is down a little bit. If we look at the chart and you don't have your VIX hedges on, why would you not put on one on today? Why? Look, VIX is at its low of since January. See that? I mean, it's right at the lows. Today'd be the great day to do it. So how would you do that? Well, you go in and you go out to closest to 120 days. You go out to 111 days. You say, I've already got positions there, right? And what you do is you take your count value. So say your count value is 50,000. Right? So you multiply that by 0.0025. You get $125. That's the amount of money you have to spend on VIX calls. So see how cool this is? So you go down to the 10 delta. Normally I look at the probability in the money, but with the VIX hedge, I always look at delta. It's the only thing that I look at delta for. So we'll go down here, 911, right? And so you got $120, $5 to spend. So what would you do? You buy two of these. You would buy 2 contracts of that call and then just put it on. That's your trade, right? Your max loss is $130. We expect to lose 3% of our portfolio every year buying these fixed calls. You know, it's cost of doing business. The wonderful thing about trading is you and I, we don't have office expenses. We don't have to have an office. We don't have to have secretarial staff. We don't have to have, all the things. We don't have inventory. Well, we do, I guess, of options, but we don't have a physical inventory that we have to house. We have to transport. We don't have distribution. We've got 100% liquidity in everything that you and I trade. I mean, think about the wonderful, wonderful thing. All we've got to worry is to protect ourselves against monsters like Joe Biden, who want to tax unrealized gains on the billionaires, right? It starts off with the billionaires and everybody goes, oh, yeah, by God, let's screw those billionaires. Then the next thing you know, they're screwing the millionaires. Then the next thing you know, they're screwing the 100,000aires. And then, Joe Blow with $50,000, he'll end up paying in the end. So we don't punish wealth. God, what a stupid concept. Hey, the people that are the risk takers that have done this and done that, let's screw them. That sounds fun, doesn't it? Let's just screw them. No. It's not it at all. I read somewhere last night that, someone was peed off. I shouldn't read all this stuff on Reddit, but someone was peed off at the amount that Elon Musk made in a single day. He made 38 billion in a single day. And 20 billion would end homelessness in the United States. No, it wouldn't. No, it wouldn't. You take $20 billion and you buy everybody a little bitty home in the United States, and I promise you that those people that were homeless will probably be homeless again in a couple of years. That's what Jesus said. Jesus is a pretty smart fellow, right? So Jesus said, hey, I won't be with y'all long, but the poor you'll always have. The poor you will always have. So it doesn't matter if you're in Chicago and now they're thinking about giving everybody a amount of money to, what is that called? Anyway, they're doing it in California, where they pay the poor people a little bit of money. You think that's going to help? No. That's why when we were at Myrtle Beach, it was so good. This guy had a little sign out. He was on the side of the road. He said, I'm hungry. And I was like, praise the Lord. We had trail mix and peanuts and all kinds of stuff in the car. So we loaded the man up. And, I've been in Birmingham before, done that, and people just poo-poo on me. I always had what I call my granola bar ministry. So I'd always try to feed the homeless. I'd always have granola bars in my shirt pocket, in my pants pocket. I always had granola bars and I hand them out. And, one guy was like, what do you want me to do with this? He said, I ain't got no teeth. I said, gum it, man, gum it. If you're that hungry, he wanted money for something else. But we gave the peanuts and the trail mixes and all the stuff to the dude. And he was so excited. Oh my gosh, he was just overjoyed. He said, this is good stuff. And, that was somebody that really, really wanted it. And I know there's a lot of people that have a lot of problems, and I won't say that I won't be homeless next month, right? But the poor will always be among. We can post our strategy in the Wall Street Journal or the Times Georgian and Carrollton, Georgia, and tell them this is how you're going to accumulate funds, right? You're going to buy low, you're going to sell high, and you're going to hedge. And we can publish that, and nobody's going to do it. Why? Because I saw somebody on my friends list today, and I was like, you got to be kidding me. He goes, something to the moon. It was one of these, what was it? It was some crypto to the moon, and he was sitting there, crypto to the moon. And I'm looking at this guy going, you're not one of my trading buddies. You're just one of my buds, and you're calling crypto or whatever this was that you're in to the moon. Wish I remember what one it was. Hold on. Anyway.
It was probably that SHIB.
That's exactly what it was. And I'm like, what are y'all doing? Now, remember, we allow in our plan, because I know y'all want to chase shiny objects and you want to chase the newest, greatest things. And I'm a big chaser myself. I'll chase the biggest and newest stuff out there, right? So you've got to, in your mind, say, I'm going to allocate maybe 5 to 10% of my portfolio for fun, shiny stuff. And that's fine. But you don't YOLO the whole, deal into one thing like that. That's how you're losing money. Now, we saw the Donald Trump SPAC the other day just go out the moon, didn't we? And we were all thinking, oh man, boy, did we miss that? Boy, did we miss it? It's up 8% today. You made 8% a day if you went all in. But there was a good chance that you'd be 8 to 20% down today as well. So it's fine to take those risks on certain things, but just make sure it's part of your plan. What is your plan? What does your plan say? Because what will happen is when TQs are down 50%, then some of y'all are going to abandon this plan. You're going to go, screw that. Man, I lost a lot and I had hedges and did this and my TQs are down. And so you'll poo-poo and puke the whole position. You'll puke it out. So don't puke, that's when you buy. It's amazing to me that with stocks, it's the only area of society where we get all upset when things go on sale. I never understood that. If we had put TQQ in from March the 10th, if we had bought that in March of 2020, can you imagine? God, let's look at it. What if we've done that? What if we said, man, when the market was down 35%, let's get our portfolio visual. Oh, another thing we do, and I'm not doing it because I know we're above, right? But we look at the daily chart of SPY, and there was some research about this that said, hey, if SPY gets below the 200 simple moving average, 200-day simple moving average, that it would behoove us to take our money out of TQs and to go to bonds. So I want everybody to know that's part of the plan. So we look at this, right? We want to see that SPY is above this. If SPY gets below this, we're going to convert to bonds. Well, Bobby, I thought we were going to buy more when it goes down. Yes, we are. Trust me, we're still going to buy them down here, but we're not going to take some of the pain that is going to be incurred in holding it down here. So we have a plan. We've got a plan. We've got a great, what I think is a great plan to get us out, and still you know, let the algorithm run. Let's see how many shares we should buy when we get down here. When we think that we're, you know, we're safe enough, we'll go back in and buy. So what would have happened if we had gone to when the market was down in March 2020? So let's say March 2020. So let's do 2020. 2020. And what would have happened if we had done TQQQ? Let's see if I can I figure out how to get it in March? Let's see. We want to do time period, portfolio type, year to year. I guess we'll have to run it from whenever we run it. Right. Let's see. 21 year start period, time period, year to year, month. I'm just looking. I'm just looking. Two assets are required. Okay, so let's go. Let's just put cash, or let's put TMF. Right? TMF. Let's say we were at. It should tell us we're 99% there with 1% there back in 2020. How would we be doing today? And it'll show us what it optimized. So optimize would be, oh, look at there. If we wanted to maximize the Sharpe ratio, we'd do 68 TQQs and 31 that. So our portfolio went from starting portfolio of 10,000 to 28,000. I mean, that's pretty good return, right? I mean, that's 100%, that's 200%. If you go to 100%, you're at 200%. Yeah, so we're at 28,000. If we went to that one, we would be up, you know, 23,000. What if you've done $50,000? I won't let me put that in. Hold a minute. Here's another way I can do this. Let's see. Portfolio optimization. See if we can do this. Year 2020. Well, where's the one where let me start out and change the, I don't know. But y'all follow me. I mean, we would have done really, really well, right? We would have, you know, had a 200% return had we, and that's probably putting it in at the beginning of January when you had the down move. Can you imagine if you just put it in March and got all of that wonderful, wonderful stuff? Let's see what the E-minis are doing today, right? So it's still up a little bit. So I was sitting there thinking, so if you needed to do something today, what would you do on an update? Well, if you need a hedge, then you could buy a complete black swan hedge. Everybody knows how to do that. Let's make sure we all know how to do that. Our chat. Oh yeah, universal basic income, right? And we think if we give people that money that they're going to be fine. That's ludicrous. It just is. So let's go. Let's see, 65 days out. We won't go more than 60, right? We go and okay. Bye. Be careful. So you want to sell the one that's around $3. Here we go. So here's what I would do. I'd sell 3 of these. And if you wanted to put a whole tranche on, you can do it on an update, right? Sell 3 of these. And we would buy 5 of these. Five of those. There it is. It's going to cost you $2.55. Make sure I'm $2.55 in commissions. $2.55. Yep. Plus commissions $2.69. So if you don't have the hedge and you've analyzed your account, then see how this works. Right? That is the black swan hedge. That is the insurance you get for being able to invest in something that's very volatile, but and fast moving like TQQ. You want to make sure you're hedged. So what else could you do on today? Well, VIX is down. I talked about the VIX hedge. Another thing that you could do is a calendar. I normally put my small calendars in on SPY. Let's look and see what that looks like. So let's say you need a little bit of a hedge. Then what I would do is go out 60 days. So here's 65. And I would buy the 40% probability of being in the money put. Let's see where she is. Come on, baby. Come on, baby. 40% right there. So I'd buy the 447. Then I go 30 days in, so we'd be looking at the 35 days. There's a 65, so now go to the 35 days. And you're gonna sell the what was it, 447? Oh, heck. You gotta choose your strikes, right? So what I would do is go back to the other one and change that. So let's say we did the 445. We sell that one, and then we'll change this one to the 445 with the same strike. Cost you $381. But what does it give you? Right? What does it give you? So analyze the trade and let's make sure we know what that trade gives us. So we're going to go hide positions. So we'll just show 111s. There it is. Let me delete everything else. That one. This one. Because we want to make sure that we know exactly what this one is giving us. That one. Now that should be it. So if I take that off, blah, blah, there, it's flat. All right. We'll change this to one expiration. Y'all have got to get comfortable on this, on the Analyze tab, right? Analyze tab is really, really important. Should the BSH not be break even? Well, in RICO, yes, theoretically, right? So if you're putting it on at one time, though, basically today it was like, okay, look, I've got to go into a complete tranche. So yes, normally we try to leg into them, but if you need one, if you need something today, then I would put on the entire tranche today. If you don't need it, that's fine. I don't need it. I'm well hedged in my portfolio. Yeah, Rod says not if you buy an entire tranche at one time. You can put it on for break even or credit, but we'd be done in steps. Exactly. Exactly. Now, if your assumption is that we're going to get a good, 0.4% pullback in the market, then maybe today you could buy the longs, right? And you're hoping in the next couple of days to sell the shorts. But as you see in my Frankenstein, I've never had the opportunity to sell the shorts. We hadn't had a down day. So then you're really kind of screwing yourself a bit because you're not capturing the credit from selling the 3 that helps finance the 5. Well, we can get cute with it all you want to, but if you need protection, get protection. You don't want to not have protection, right? We're protecting to the downside. And this is why this little trade is so good, right? Something like a little diagonal. Check it out. Isn't that cool? So what it does is gives us downside protection at expiration. And this little profit hump, and how many times we talk about profit humps? Little profit hump, watch what it does over time. This is another one of those trades, kind of like the 111 that we've been doing in the micros, that gives us a little bit of downside protection. That's when we put them on, right? So not only do we have black swan hedges that kick in down here on the lower side, but we've got things like calendars that kick in on slow grinding move downs. That's what this thing does. So let's go back to today's date and see what Greeks it gives us. So go to today. And let's look at our price slices. And so at T0, right here, at the current price, what does it do? It gives me -5 deltas, -6 deltas. It gives me a little bit of positive theta, and it gives you positive vega. And we put these on up days and on days when the VIX is down. So it'd be a great day. So this is another thing. If you need a little bit of negative deltas and you need a little bit of positive theta and your Vegas are -700 and you go, oh my gosh, how do I get that? Well, yeah, then you're going to need some side. Now, if you really need some big Vega, what do? You do this at SPX. Now it's going to cost you a few grand to put that trade on, right? But it gives you the protection. So what I would rather see most of you do is, hey, it's a good day to put on one, throw one on in SPY. Throw one on in SPY. Or you can throw one on in the Qs too, right? You could do it in the Qs. Since we're in TQs, right? You can do it in the Qs. I just kind of like keeping it in the SPY. So I want to make sure everybody, could we start with a diagonal BSH? Yes, you could. Yes, you could. Because when I made my enormous wealth in March 2020, That's all I had on was diagonal BSHs. And then build with good to cancel. Yes, exactly right. So everybody knows how to do that too, right? I'm sure everybody knows how to do that. So what if you were doing that and you're going to build it diagonally? Now this isn't the ideal way. I'd rather not if I didn't have to, but yeah, you can do this. So what you do is you go to the 65 and you would say, okay, I'm going to sell one that's $3. So I'm going to sell the 3,100. So sell those. And then we're going to go out, and I'll change the thing on that. And then we'll go out, 30 days less. Right in here. That one. 3,100, 30.50, right? So you could buy these. Oh, heck, did I not hit my thingy majig? I thought I did. Better keep your control key down. Let's go back to 65. 3,100. It may not let me do it because, let's see, let me do something. Aha! It's not going to let me put it in like that. That's crazy, isn't it? But anyway, yeah, you could do that. That's what you do. Then you sell 3 of these, right, for $3.20 and go out and buy those 5. And when you analyze that, you'll see it's pretty good, right? It's pretty good. And then what you would do is on this 65, you would go, okay, now I'm going to buy these when I can do it for maybe $1.50, $1.35 in the same expression. You ultimately want to get your loans in the same expression as your shorts. That's where it works best. But see what a great little strategy this is, y'all. I mean, we got it. We kind of got it all, don't we? We've got what we've got is we've got a great bullish strategy in the TQQs, right? TQQs and technology. When all that goes up, man, I mean, that's giving us really nice positive. So when the market goes up, we are looking good. So when the market grinds down or is neutral, what do we have? Well, that's where we've got the 111 trade. We've got the calendar trades. And these are the things that kind of helps us on, kind of a grind down market. Uh-oh, that's going the wrong way. Grind down market. Market goes down gradually, right? So that covers us there. So then we got crash protection. This is our VIX hedge and our black swan hedge. It's really kind of cool. So market goes up, we're good, baby. What happens if the market grinds down? Well, 111 count. Well, what about if the market just drops like a rock? Well, we got the black swan hedge and we got the VIX hedge. So we got some cool stuff in here to make a pretty comprehensive plan. Let's go over our little rules again. All right, let me pull them up because I can't remember them all. And again, this came from going on vacation. Bessis, what are you going to come up with when you go on vacation in February or December? I said, I don't know, probably come up with something. Because I just love, the strategy of it. We're trying to defeat the enemy. And where did I put? Oh, here. They got meatloaf at the Southern Lady today. I told Beth, I said, we need to go meatloaf. She said, I don't have time. I got to do this and that. What she don't know is I'm going to go by myself and I'm going to get my meatloaf. All right, here we go. All right, so first of all, you got to figure out in your portfolio a percentage that you're going to put in the TQs. And then how much you're going to put into TMF. Or cash, but I think TMF we showed was the better performer, right? So if you're kind of conservative, you can do 50-50. So the worst case scenario is you're going to lose 50% of your account if TQs go to 0. Can you stomach that? Now I'm taking a more aggressive approach. I'm at 80, right? I'm at 80, and I put of the amount doing it 20 of this, right? But then I did leave a little bit for cash. So, you need to leave some cash. So you can say, okay, I'm going to put 80% of the entire account into this. And then of that 80, put 80% of the 80 into TQs and the 20% of the 80 into this. And then the rest you could leave in cash. You're going to leave a little bit of cash. Why? because we're going to have to buy stuff when stuff goes down. So I think right now my TQs and my TMF equal 90% of my portfolio. That's exactly what it is. Now I left 10% in cash. All right, so if this is in 90% of your portfolio, then you got to figure out, okay, of the 90% that I got invested, what percent of that do I want to be TQQs? So you got some decisions to make. What's your risk tolerance? I don't want y'all fussing when TQs are down 80%. You go, God, Bobby, I followed you and you're a moron. We know the risk, right? We know what those risks are. All right, next we're going to use the AIM spreadsheet to tell us when to buy or sell. So after you set it up, we will get signals to buy or sell additional shares. It's kind of cool, right? When it goes down, we're going to buy more. When it goes up, we're going to sell more. Then we're going to use the black swan hedge to hedge a big downside move. Then number 4, we're going to use the VIX hedge, VIX call hedge, to also provide further protection on a big down move. Okay, so those are the first 4 steps. 5, we're going to put on 1-1-1 trades on down days. Why? That's the most advantageous time to do it, on down days, right? And what does this do? It provides grind down protection. Okay. Number 6. And this is kind of a hedge in and of itself, but I like it. We're going to try to add to our TQQ. We're going to sell covered calls on them as well. I just like that idea. Bobby, aren't you limiting your upside? Theoretically, if I were to get called away, right? But I'm going to keep rolling those things out, bringing in additional premium because I do like that as well. All right, then we're going to use the big green monster to kind of form a market opinion. Big green monster. Y'all saw it in action today. Right? That's our levels on the chart. All right, then we're going to, number 8, we're going to use a skew driver to also give us some clue on market direction. And y'all have seen it works great. All right, we're going to use the 200-day moving average on SPY. Simple moving average on SPY. If SPY is above it, we're in the TQs. If SPY goes below it, that's when we got to consider, hey, baby, you know, it may be time to convert to, you know, total TME. But that's just something we're looking at. All right, now I added 2 things to it that's not on my list here. Make sure I can remember them. We know we have the ability at any time to go into the bunker. We can buy and sell futures. There's very few times that we're going to need to do this. But if it happens to be overnight and I get word that China has done an all-out invasion of Taiwan and the market's just crater, I may sell a future to hedge my portfolio. And we've gone over that, and I'll go over it more in the future, right? So to speak, the futures. All right, 11. Another bunker procedure that we have is the protective collar. Let's say that you're scared about your portfolio and you're going on a cruise for 10 days and you're like, I just don't want anything to happen. Well, you could sell all your TQs if you're nervous, but why not just put you on a collar to protect that while you're gone? So what does that mean? Then, well, we're already selling the calls above, right? So that would be, selling the call above and buying a put below. So that protects you. And I think I drew that for you yesterday. It looks like this. So here's a stock risk graph. If you buy stock, right, it looks like this. Crap, I don't know why that goes like that. It's straight. Straight. Right? So you buy stock goes up, stock goes down. When you put a collar on, here's what you're doing. You are limiting your upside. You're also limiting your downside. Kind of looks like that. So instead of you having unlimited losses, you'd have only a loss down to where your put is. You have profits up to here. So but isn't that cool though, that you can go, I can take a break? Wait a minute, Bob, you mean that if I don't want to look at the market in all of December and I got family coming over and I don't want to be doing all this, that I can just put a pause button on and do a collar? Yeah. Isn't that cool? So you just kind of, neutralize it for a bit. Now you may miss out on, the upside or, but you protect yourself on the downside for sure, right? So this is just a way to kind of temporarily pause everything. And then number 12, the last thing is rebalance annually. And your assumption may change. So I'm 80-20 now, right? Basically 80, well, you see what it is, 90% overall, but of that, it's this and that of, but let's say then you go, I want to go 50-50. My number of share or my amount of TQs is equal to my amount of TML. Okay, doing 50-50. If you're a little more cautious going into the year. So you make those decisions and you can rebalance anytime you want to. That's the cool part. But isn't this a great little strategy? I mean, I really think it is. And I've asked y'all to try to build hope, poke holes into it, try to, knock it down. I posted it online in a couple places and, people, they're just, why is it so incredibly difficult? Whatever. I don't think it's incredibly difficult, right? I mean, what am I having to do today? Am I making a trade? No. Have I made a trade? No. I may put on a 1-1-1 if we do get a fall at the end of the day, but now I don't have to because my Greeks are just perfect, y'all. A little negative delta, a little positive theta, and very much positive theta. What's y'all's thoughts? Any feedback whatsoever? Rod's got to run to a meeting with the boss man. And if he keeps running that thing as well as he's doing in the in his 401k, he's gonna be the boss man, right? God, now we're up $702, y'all. Look at us. What's the other one doing? We're up 1356 in the other. So we're not bragging too much, maybe we are. Maybe there's holes in it, but I think it's a really, really great comprehensive strategy. Now let's just stay tuned. Right? Let's stop chasing. Y'all see me chase, find new different trades, but I think what we put together is very, very, very comprehensive. Very comprehensive. I can't wait to I'm gonna transfer some money over into an IRA from my government plan, and I'm gonna run it in there as well. Now, can I do all the option stuff that I can do? No, I can't do it like I can in just a regular account, but I'll do my hedges elsewhere. So you've got your 401k and then, you've got another account to the side that you're just running the hedges in so that they all, when I see that count down 80% one day, I'm like, oh gosh, I missed, I lost hundreds of thousands of dollars. It's not bad if you've got another account that's holding the hedges. Cool, right? All right, who's got any questions? We got a few extra minutes. I can show you anything if you like. It is good stuff, Enrico. I think it is. I think we've got something really, really, really comprehensive here. And then that's the thing, right? Just stop chasing other stuff. Just stop it. Just run it and go. I think we've done enough back testing. I think we've shown portfolio visualizer to show that, yeah, you can hold TQs. And now if we can hold them and also have a hedge on it, my gosh, I mean, it's a look at this. My profit year to date. Now here's where I messed up, right? My SPX. See, if I hadn't had all those crazy, and a lot of that was because I closed them prematurely and just took the loss, and I probably should have stayed in it. This wouldn't be as bad. So this looks bad, right? My yearly profit loss in SPX is bad. And right now it's bad too with that thing. I really don't even need that. I ought to close the darn thing. But I'll leave it on. I really don't need 256 positive Vegas. Look, I got plenty. But we'll leave it on. But look at this, y'all. My TQs just is no longer we've been doing this. Now we did hold it in the AIM account before to a much smaller percentage, but I mean, we're up just on my open, we're up $3,022. You kidding? And look at our little micros, y'all. That's the money. That's the money right there. So if we can stop running some of this stupid stuff that we do and quit chasing stuff, doing everything, we should do quite fine with this. If you have a few, how would one use the AIM-2 on leaps? Oh yeah. We were talking about that the other day, right? So the cool thing about leaps is I built this so that you can do leaps on it, okay? So the cool thing is, let me see if I can show you. Uh-oh, I got to sell a share. I got a trigger. What that is, when you see that, you need to think to yourself, the ATM machine is working. The ATM machine is working. Look at this. The ATM machine has just said, hey, Bob, you need to withdraw. So you need to sell a share of the TQs and convert it to cash. Isn't that awesome? It's good to see the little thing work. All right, let's talk about doing this with that. So if you'll trust me on it, the spreadsheet will do leaps as well. So you need to make another column, like you need to unhide one of these and put your symbol in there. So instead of it being the symbol TQQQ, you would do the symbol of whatever leap that you bought. So let's just say we're going to do SPY, right? You're going to add SPY to your program. So check this out. Y'all like this. It will recognize a leap. All right, so here we go. So let's say you want to go out, I don't know, 415 days. And you're going to do a in the money call. Maybe around 80% probability being the money, 70, wherever you want to do it, right? So we're going to buy that one. All right. So you buy that, it's going to cost you $14,200 to do the lead, or do whatever you want to. So what's this? This is cool. You hit this and you hit copy, right? So when you copy it, then you come back over to your little spreadsheet and unhide one of these. I say unhide one of, I said unhide one of these. Can't get good help anywhere. So what you would do is you would go Control V, right? And it actually puts it, now isn't that cool, right? Isn't that wild? So you put it in there and then it recognizes that leap. See that? It's pulling in live automatically that leap. It's very cool. So then you would go over here and you would go Control V. And how many leaps did you buy? Oh, 2 of them. I did it today, 10, 27. What price was it? What was it, $141 or whatever? Was this new capital rebalancing or new underline? Well, it certainly was a new underline, right? Then you go back over here. Hopefully it works right. Ta-da! Isn't that wild? Now, why does it say take action here? Okay, so I got to fix that. So that is because it is looking to get information where? It's looking to pull in something here. And now I've changed that formula. So I got to do that form. Hold on a second. Where's the formula that I got to change? This is a good thing. Where does it first show up? Okay, looks like it first shows up right here. So if that, and that's basically saying if this is greater than 4 in A10, in other words, if it's greater than 4 characters, like TQQQ has 4, TMF has 3, right? This has greater than 4. So this tells the spreadsheet this is a leap, right? And if that is equal to that, and B is equal to that, and that is equal to that. Oh, wait a minute. I haven't done all of these yet. GH. Aha. Here's where it's figured it out. So it's here. So this formula is where the problem first starts. So it says AIM activity M10 times D10. Well, let's see what M10 is. AIM activity M10 is down here. That's why it's not recognizing. So what I did is it's got to be I change it to L1. Now watch this. When I change that to L1, and basically that's what I'm doing to all of them. So I need to change this to L1. Isn't it kind of cool when we go behind the guts of this thing and then hit your F4 button that puts the little things on it like that, which means don't change it ever. Ta-da! Crap, didn't work. Hold on, Bobby. Times DT. How does it? Aim activity L1 times D10. All right, I got to go figure out what L1 times D10. How embarrassing was that it didn't work? Oh man, I'll figure it out. L1 times D10 is the safe. Oh, wait a minute. Yeah. That figure is gonna, I'm gonna have to fix that figure. All right. So here's what I want you to do, MRP. I've showed you how to do it, but I got to fix the leap on it. I got to fix the safe on it. Now, when I fix the safe, all this other stuff will do. Now, the cool thing is I had a forward leap in here before. So I wonder if I've left that in there somewhere. I've got older versions of this, and I'll figure out the formula that I got to do. I figure that is aim activity L1 times D10. Well, what is D10? D10 is that. Aim activity L1 times D10. Give me 1 second on that. Aim activity L1. There's aim activity L1. Well, that should bring back a number, and I'm not sure why it's not. Why is it not bringing back a number? What if I took this and did this? Ta-da! Ta-da. I think that's right. Now I got to, only thing is I need to check it for leaps. Now, let me tell you this though. There is a book on this, and this is where I got the information from. So let's go to Amazon. Let's see. Aim. There's an Aims with Leaps book out there. Here it is. Aim for Millions with Stock Options. Right. So look at this book. That'll give you the thing. And I need to look back over it so I can make sure that our spreadsheet and our aim is all correct with that. And I'll do that. But I think I fixed it there. I think that did it. So if you got any questions on that, let me know. I'm going to take this out. I'm going to hide it again. I'm going to take this out. Take this out. This out. This out. This out. It's kind of cool going behind the scenes and looking at all the stuff where I program that in. And again, what is it? Buyer beware, right? Buyer beware. You didn't buy it, but be careful. Double check my math on stuff. But that's exactly how you would do it. Just kind of like that. It should be L6. Well, yeah, you say it should be L6, but no, if you didn't catch our earlier sessions, I was using these governors, right? So I used a governor to make our decision. So it would basically say that it should be M6. Yeah, you're right. I do not use this anymore. I do not use this. And the reason is I tested it, I back tested it. I did not like the results. It did not do what I thought it would do. So now we're basically just keeping it at 0.1 all the time on everything. And it still has a governor because Lucello, and I posted it the other day, Lucello said it took him a year to develop, but what it basically was is making sure that if, all right, here's portfolio control, here's stop value. So stop value minus portfolio control is 3,969. So ordinarily, if I was just running aim, I hope I'm not boring y'all with the specifics out there. But then my action says 3,975 and I need to sell. So if I take 3,975 and divide it by the current stock price, this would say that I need to be selling 26 shares. But Lucello's governor says that's fine, but your action has to be higher than your safe. Aha. So if this is not higher than this, we don't do anything. Now it is. Now all of a sudden, look, it says dollar amount this, dollar amount this. So now this has to be higher than that, and it has to be, the difference has to at least be equal to the stock price. Oh my gosh, I know I'm just driving y'all nuts by doing this, but so we actually do have a governor already built in. So that's really all you got to do. So now instead of using, you know, LM whatever, we're only use L1. Oh, Lord. So not L6, but L1 on all those things. And if you got the latest spreadsheet that I uploaded, then you got the correct formula. See, now you see the dollar amount's $1.54. And the reason that it's showing to sell one share is because the difference between this and this is greater than the stock price. So if it was not greater than the stock price, I can't buy a share. So right now I mean sell a share. So right now it's flashing me to sell a share, which I think I will do and pocket my money. Then go and get me some meatloaf with the Southern Lady. All right, guys, good session today. Appreciate you joining me. I will see y'all tomorrow.